PSU stocks have been doing very well, and today we would have thought that BEML would be under pressure because of increased supply, because the government will divest their stake. But it's actually racing away.
Well, actually, Reema, because this is not going to the retail audience, it's a strategic buyer which would probably buy the stake from the government, and that is why the liquidity constraint is maybe a bit out. So tell you the news, the government has got an in-principle approval for strategic divestment of 26% stake. Remember, they hold around 54% stake, and as we earlier mentioned, that the government can garner around 1,000 to 1,200 crores out of this divestment. Now, they say that they are going to sell this to strategic buyers, as I told you earlier, which can help them to get technological advancement and tie which has been a laggard and a loophole, if you can say, in terms of this company getting new orders, because it has always been said that the company does not have that technological edge over its competitors. Now, India Nivesh has also written a note. They say that the development is positive for BEML in the long run. They say that the strategic investor would look to bring in the operational efficiencies, as I mentioned, but it could be tough to get a strategic defense player to willing to invest in BEML. They also say that they need clarity on who will have the management control, what will be the resistance from the BEML trade unions, and also what will be the acquisition price of this. Until we get all these clarity, they expect the stock to remain volatile. Also remember, if this 26% is given out to one strategic buyer, it can also trigger an open offer. So that is another thing to keep in mind. But if you look at the valuation picture now for BEML, in the last 15 days, the stock has run up 16.5%, but the 5-year ROE CAGR that it has grown is just paltry 0.2%. Even other, if you look at the other PSU stocks, stock like BL is up about 5%, another stock from defense play, and PFC and REC as well have grown up by around 10% to 6% in the last 15 days. And if you compare it with the 5-year, return on equity CAGR, then stocks like Power Grid, Engineers India have done pretty well, up about 15% and 20% over the last 5 years, while PFC, REC as well have seen good growth coming in 20% and at the rate of 23% over the last 5 years. However, if you look at stocks like Power Grid and NTPC over the last 15 days, the run has been a little less than others because they had already run up earlier when we had seen that yield movement wherein the yields had fallen off, and that is when we had seen the run. If you look at the valuations now, the 5-year average price equity ratio to what they are trading at right now for the FY18 earnings, NTPC, BEML, BL, all these stocks are running at a premium to their 5-year historical averages. Now, you can have a case for stocks like BL, which have actually re-rated given the great amount of inflows that we have seen. So they can have, probably trade at 21, 22 times their FY18 earnings versus the 5-year average of 16. But we're not sure of how BEML can trade at such premium, given that they have not really returned that much to their shareholders, and even the prospect don't look that great. In terms of other stocks like PFC, REC as well, they are trading to a discount to their historical book value. So it remains to be seen how much more leg is there to this run. But as of now, all these stocks are rallying.
All right. Thanks so much for that.